Today is Monday, October 16th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMS Senior Ag Analyst, and Alan Bush, ADMS Senior Financial Economist. Starting with the financials this morning, Alan, in addition to the headlines and the turmoil around the world, what are the other events that can potentially move the markets this week?
Okay, well, on Tuesday, we'll have retail sales, and they're expected to be up 0.3%. Also Tuesday, industrial production anticipated to be unchanged, and capacity utilization at 79.6%. Also, the housing market index guessed at 45. Then on Wednesday, we'll have housing starts. The estimate there is 1.394 million, and the more important permits at 1.45 million. Keep in mind, you have to have a permit to have a start, so it's really permits that are more important. And then the Fed's beige book at 1 o'clock Central Time. Thursday, the Philadelphia Fed Manufacturing Index guessed at a negative 6.8. Existing home sales at 3.9 million. But the most important event, I think, this week will come on Thursday when Fed Chair Powell will speak before the Economics Club of New York, and we'll see what he has to say as far as a policy outlook.
Let's talk about the gold market, Alan. Is the gold seeing much flight to safety action due to the uncertainty events in the Middle East and Eastern Europe?
Actually, it has. But I think the gold market is responding more to, I think, what appears to be a rather dovish change in the Fed outlook. So the dominant fundamentals affecting the gold are the usual suspects, the outlook for the dollar and the interest rate outlook. Of course, those are very much intertwined. So the dollar has very much underperformed lately, especially when the Bank of Japan came in to sell dollars. So that has supported the gold market. The dollar weakness. Of course, there is the flight to quality buying that's coming in, and the increasing prospects of a less hawkish Fed going forward. In fact, just on Friday, we had Philadelphia Fed Bank President Harker saying he believes the central bank is likely done with rate hikes due to the ongoing waning price pressure. So all of those contributed to strength in the gold market in the last several days.
Lastly, Alan, what are your thoughts on the stock index futures? We did have a mildly bearish Empire State Manufacturing report today. What's it look like?
So that was totally ignored, and it appears that traders are focusing more on Fed policy and not just this one report. So the fact that stock index futures could rally and make new highs very, very quickly after this mildly bearish Empire State Manufacturing report was released suggests that the trend is higher and that there would be follow-through strength in stock index futures today. Plus, of course, we had Harker on Friday with dovish comments. He's speaking again today, and traders believing that he will probably follow in the same line of thinking with more dovish comments.
Morning, Mark. Let's take a look at the grain markets. With last week's USDA reports behind us, what will drive ag prices this week?
Well, we have our routine usage data, starting with this morning's NOPA crush report from the month of September. Key to me will be just how low NOPA members' bean oil stocks were at the end of last month. Recall, we've seen record bean oil usage for biofuel production the past 3 months, with implied demand running well above the USDA usage forecast. As we expected, USDA did raise both old and new crop bean oil usage by 300 million pounds last week. However, in my opinion, still wasn't raised enough. Bean oil stocks held by NOPA members are expected to come in at 1.2 billion pounds. That would be down 17% from September of last year and the tightest since December of 2014. We'll also be watching the daily export wire to see if any sales have been announced, And we saw a small sale of corn to Mexico and some bean meal to the Philippines. Harvest progress this afternoon is likely to show corn harvest nearing the 50% mark, while soybeans probably have surpassed that. We're looking for about 56 to 57%. Then, of course, we have South American weather, which will now start to become the focal point of the price discovery process.
And what about that South American weather, Mark? Springtime in South America? What's the weather look like there?
Well, areas of southern Brazil have been receiving too much rain now for several weeks, and that pattern appears to be likely to hold for the next week to 10 days, pretty much right to the end of the month. Its biggest impact so far has been on their wheat crop, with the quality concerns rising. The USDA also lowered their production forecast for their wheat crop 5% last week. Both Argentina and west central parts of Brazil have been in a drier pattern, with drought continuing in Argentina, and that likely will continue for the next week or so. But we do see better prospects for rain arriving by the end of the month and into early parts of November. Plantings have been ongoing, but they've been starting to slip behind the historical norm until we see better rain coverage. Brazilian bean harvest or bean plantings are up to 17% versus 24% a year ago. The first crop corn plantings in the west central region, where it has been too dry, they stand at 41% behind 46% a year ago. In Argentina, their corn plantings just getting underway. They're about 19% behind the historical average, while their bean plantings are really expected to start up here by the end of the month.
Last question, Mark. Do you think corn prices are close to breaking out of this 30-cent range that we've been trading in now for nearly 2 months?
Yeah, it's been moving sharply sideways here for a little while now. It will eventually break out. I don't know that it will happen this week or even this month. Buying interest just seems to dry up once we get approach the $5 level, and selling interest dries up as we get down to the $4.70 level. Speculative traders do have a short position. However, it's not huge by historical measures. History, to me, suggests we're probably going to see lower production estimates for the U.S. corn here in November or into the January final report, but I don't think it's going to vary much from what the USDA said last week. Exports, to me, still seem to the need to prove themselves, despite the USDA cutting that forecast 25 million bushels last week. Carry out at 2.1 billion bushels shouldn't limit the upside, but strong profit margins in the ethanol sector is likely going to limit the downside. So to me, the breakout's going to occur by South American weather. That's what's ultimately going to drive it, but I don't think that's probably going to happen until we get sometime into November.
Thanks, guys. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.